right, good morning, everybody. Welcome to Stock Analysis Friday on this June 13th, 2025. Great to have everybody here. All right, a little bit of turmoil going on in the world, to say the least, right? So a lot is going on. We're going to look at the charts today. And again, the purpose of Stock Analysis Friday is for me to look up stocks you're interested in pursuing. You may be already long, you may be wanting to go into a stock or whatever the reason, but that's the purpose of Stock Analysis Friday. So if you do me a favor, when you type in the stocks, again, do it all in caps and do about, let's do no more than 3 at a time. It keeps the flow going. And then let me know when you type in a stock if you're long, short, or just thinking about it as a to enter the trade or investment. Okay, so let me know that. All right, let me go through a few quick administrational items like I do every Friday here. And of course, we have to tell you a little bit about the risks involved in trading the financial markets. Past performance doesn't guarantee future performance. And of course, we deal in a realm of probabilities. So you always want to trade with money you can afford to risk, called risk capital. And then, of course, use risk control in each and every trade. Now, if I make a suggestion here, please realize it's in my opinion. Yes, it's based off doing this for a long time, but it's still my opinion. So always run that by your financial advisor or whoever manages your money to be sure it's suitable for you. I don't know your personal situation. They certainly should. All right, a couple of books that can help you on risk control and money management are in front of you right now. And you can get these at our store on Amazon. And you can go to our website and you can see it there to order. Also, too, I will put a link in the recording. So if you're watching the recording, look below and there'll be a link to our bookstore. My newest book, The Art of Trading on the Far Right, is out right now. My previous book is over there on the left called the same thing. That came out in 2008. So my new book just came out a few months ago. And I'm really happy with the reviews because I put a lot of work into it. It's 608 pages. It is the longest book I've ever written and the most comprehensive book. So that's available at Amazon. You might want to check that out. And it's for both. It takes you really from a level of knowing nothing. And even if you're experienced, believe me, you'll get something out of that book. All right. So Elliott Wave Techniques was another book I came out with, published by McGraw-Hill. And that is all about a form of technical analysis called the Elliott Wave. But anyway, you can read the reviews and so forth on Amazon. All right, same thing with our software. That is available, and I'll put a link below for anybody interested in the software. We have bundles. You can purchase it a la carte. But we have charting software. You're going to see that being used today. We have scanners. You're not going to be seeing that used today. That is how I uncover trades. But today, you're going to be giving me the ones to look at. And then I have risk control software as well. So anyway, you can check this out on our website. It's traderscoach.com, or you can go to our other website called appliedrealitytrading.com as well. All right, give us a like for the YouTube algos. And I do want to also quickly go over the market really quick here and talk a little bit about the overall market before diving into individual stocks. All right, so one of the things I want to point out here is that on the Dow, we had a big sell-off, and we also had that sell-off come after a double top and an inverse head and shoulders, which I've marked here. So on the chart here, basically the head is here. It's called an inverted head and shoulders. Shoulder here and shoulder here. And the shoulders represented the double top. And then, of course, following that, we did have a sell-off, and now we've had a recovery. So now we're kind of waiting for the market to kind of indicate what's the next step. A couple things to keep in mind here. I have a wave 5 target zone here on the chart, and this is the Dow, but it also is occurring on basically the NASDAQ and the S&P as well. So we're seeing the same type of pattern on both of those markets, which is no surprise because the NASDAQ, of course, pretty much is running the market these days because of all the, you got Google in there, you got Meta in there, you got Tesla in there, you got NVIDIA in there. So all the big boys are in there that are all very heavily invested, and they carry over to the S&P as well. and of course the Dow. But in any case here, everybody's familiar with the Dow. Anytime you cut the news on, you always hear about the Dow. So that's why I'm kind of pinpointing the Dow here at this particular point. But in any case, again, this analysis I can pretty much show you across the board. But in any case, we're in a wave 5 target zone, which I've circled up here. And this is an Elliott wave target zone based on a Fibonacci extension. Now, we've been in a bull market since about 2009. So it's been a fairly unprecedented bull market. The only correction in that bull market was COVID, which is almost kind of an anomaly because the market recovered so quickly after that. But so we're in a target zone, which means that we are in an Elliott wave top area. So usually when you get to a wave 5, you have a sell-off after that. So that's kind of where we're at now. Are we in the sell-off already? We could be. Maybe this is just a dead cat bounce before moving back down, or we could make another high here. Now, when we look at stocks today, you're going to see, like if we look at Tesla and NVIDIA, they're poised to make another high. So my reasoning here that the market is not yet in a bear market is simply because if we have big stocks like that poised to make another high, then how is the market really going to sell off? Because they really represent the market for the most part. So that's why I think we're not quite in a bear market yet. We may make one more high. Maybe we'll get into the upper 40,000 mark on the Dow and see that across the board on both the NASDAQ index and the S&P. But in any case, if that happens, then we have to look for some selling to return at some point. So that's why I put these support levels down here for us to really follow the market like watching the tail on a dog, so to speak, okay? We don't know where the market's definitively going, right? Nobody does. And we're at a critical point right now. But if we can follow the market properly by looking at support levels that need to hold in a bull market, then we kind of assume that we're in a bull market still. But if these support levels get broken, then that's where we change our mood in from a bull market to a bear market. So we're going to watch those very closely, and especially this one here at 32,327.20. So anything above support here is kind of noise. All right. But when they start breaking those support levels, then we pay attention. Now, one of the indicators that we use here is called a PTF, and that is bearish, indicating there's a 75% probability at some point the market's going to turn and go below that. But we may get another high before it does that. Or if it doesn't, and we hit this wall of resistance here, which I've circled in the gray, then we could sell off from there. So we're kind of at a critical point in the market, and we've got a lot going on in the world, and yet the market has not definitively sold off. Okay, so that kind of says the market's pretty resilient, and that we usually see in a bull market. So we'll see what happens, or a continuation of a bull market. So we'll see what happens with this, but we'll look at it every week. But that's my synopsis, and it also carries over to Bitcoin too. I think Bitcoin is poised to make another high by the end of the year as well. All right, so I just wanted to share that before we start getting into stocks to kind of set the mood, so to speak. All right, I'm going to take a look here at Etsy first. I'm going to share one with you here. I always like to kind of do that. And so if you're looking for one to trade, I'm liking Etsy. All right, so a couple things we like about it. All right, we're not getting in late on a trend. We're getting in what appears to be after a bottom could be formed. And that's the weekly chart on the right with all of our indicators loaded. This is the daily chart on the left, again, with all our indicators loaded. So we've got two green PTFs indicating more highs at some point. And basically what we do is we find the highest high in that green area, and that is what the PTF is saying should be breached. So we have both a kind of a short-term and a long-term look at this, both going to the upside. We also have something that occurred here recently on the owl, which is this indicator here. So this is the owl. Let me just write this in here. This is the PTF. And so the owl, which is one of our indicators, is indicating now it has bullish momentum, and it has not seen bullish momentum in a year. Okay, so that's a good sign for Etsy as well. We've also broken all the price action to the downside, which is what our pyramids look for. All right. And we have a price action to the upside on the short term. So Etsy is one I'm still recommending to everybody. Okay. So I think we looked at this, of course, before, and we liked it as well. But I wanted to bring it up again because if you're new here, this is one I think that would be good. And you can make this a long-term almost investment because it should now start to move to the upside. All right. So that's the one I like to share. And let me now go into the comments area here and start pulling up stuff here. All right. Good morning, Alexander, Jim. All right. Hey, Jim, I think you're the first one. Okay. Stu, good morning to you. All right. USO. Let's take a look at USO. Now, USO is the ETF for oil, crude oil. So let's take a look and see where that's heading. All right. Now, we actually, have been bearish on USO quite a while back, but then it kind of went sideways into this channeling market. And I've got a red line down here on the chart on the right, which is a weekly chart, indicating the bottom, that if this thing was in a situation where it should make another high, that bottom should hold, and it did. So that's a good sign. Couple things, though. We're still technically in this channel. All right. We never really broke out of it. So, and it's been in there for quite some time, almost like 2 years. So I kind of was bullish on it back in this area here. And then I kind of went flat on it because it wasn't moving. So that's a concern. And these channels, can look very bullish at times inside the channel or very bearish at times inside the channel to draw you in, but then it stays in the channel. All right. So you don't want to have your money sitting dormant, so to speak. All right. So this is not broken out yet. And we have a red PTF now over here. So this breakout appears like, unless this changes to green, and it could, okay, it's wrong 25% of the time. It is correct 75% of the time. So it's not 100%. So in a situation like this, pretty strong, a break, a gap here. We may come down and fill this gap, and then we'll see what this thing does later on. But I'm not going to make it a buy right now, Jim. I would put it on a watch list, and let's see if it breaks out of this channel. Let's put another one of these lines up here on the top of the channel. Here, I'll go up a little higher on this, right about there. So if it breaks out of there, and that price up here represents the high here. So if it breaks out there, then we got a pretty good chance of it moving then up back into a significant trend to the upside. But until that happens, I would hold off. Okay, so let's look at it next week. Okay. All right, so that is that. And then your next one is UNG. Now, UNG is the natural gas ETF. Now, this is the one I'm bullish on. All right, now pull back, but it has not taken out its low. All right, the low being represented by the red line down here, both on the daily and the weekly chart. All right, so we pulled back down to structure. Now, we had a nice move off the bottom, so it's not unusual to get a pullback, but we do want to see it stop when there's major structure like what we had here. And if we drew some fibs in here, this retracement, I think you'll find, pretty much stopped right near the fib zone there. Okay, so we kind of got a little bit of bouncing off. This first pullback after a breach off the bottom can be quite significant. And in terms of Elliott wave, it can retrace 100% or near 100%. So it's not like a normal retracement. So the fact that it broke that fib retracement a little bit is not unusual for this particular situation. Now, potential here, I think, is at least to get to 46, where it's 16. The bottom, you need to put your stop at the bottom on this one. Okay, so you have to give it a little room. So you can do that. You can probably get an option if you prefer to do it that way. But you probably are going to hold this for a little while. The danger of getting into this is we may stay in this range for quite some time before it breaks out. So if you really wanted to be sophisticated about it, there's a couple things you could do. You could put a trend line like that, because you've almost got like a bullish wedge here. All right, something like that, or even a pennant. All right, and so you want to break out from that to the upside and then take the trade. Okay, so I'm going to leave that up to what you want to do with that. But if you're in it now, get your stop below that red line, which represents the bottom. If you're not in it, I would wait for it to break the wedge. Okay, that's how I would play that. Thanks, Jim. All right, let's keep going on here. Now, if I miss you, because a lot of people type stuff in here, just type it in again. Sometimes I miss them. All right. All right. Here's one for Alexander, ACHR. ACHR. I don't know if we looked at that one before, but let's go ahead and load that. And he's watching this, I assume, for a long trade. Okay. So we kind of, let me just see where we're at with this owl here. So we got an owl here with a high of 3.6. I'm looking on another screen, just so you know. And then we had 3.43. So the system correctly identified this as a higher owl than this by labeling it still in wave 3. Otherwise, I would say you might have something like this, right? So according to the system, that's not the case. This is all still 3. A little messy, but still 3. So this would be the 4, 5. So it doesn't mean that 3 may not. 3 looks like it may be over. We may be going into 4 at this point. So we'll have to see. And 4, we may have pulled back. And look, we gapped down. And this is kind of an interesting scenario here, because it also is the concern I have about the overall markets. If we don't break out and make new highs in the market, then we may see this, you know, we're thinking it's going to go like that, but look, all right, and then it turns into an A, B, C, that type of thing. So at this point, Alexander, I think I would stay out of this one. I think you can find a better one. We also have a yellow PTF over here, bearish divergence, and you know, a gap down. So we may fill that gap if you want to go to an intraday time frame to see if there's an opportunity for a quick scalp there. But at this particular time, with the bearish divergence, I'm a little concerned about putting you in it. Okay. Now, with that said, we do have a fair value gap here that has been hit. All right, but there's no follow through. So in terms of the context, that concerns me. Okay. So I would keep watching. All right. I guess is the best way. All right. Let's say. All right. Gene's asking a question. All right. Thank you, Gene. All right, Stuart. All right. Let's see. Watching both of these, UNH. All right. So, all right, big sell-off. I don't think it's done. Okay, now you may get a rebound on this, but we still have a red PTF here. So if you're a long-term investor, do not go in. That would be my situation with that, a recommendation. If you're a trader and you're playing off the bounce, all right, you want to use lower time frames to help you confirm an entry to the long side. So sometimes markets get overdone, right? All right. And so then you get a rebound, but it doesn't mean the trend is over. Okay. So you may, if you're short term, you may want to try to get the rebound. Usually when you get a price bar with a tail on it, okay, you'll get some type of rebound at some point, but that's still a bearish bar. And all our indicators are extremely bearish. This is extremely bearish. This is bearish. This is improving. All right, so short term, I think you're going to continue up with a bounce, fill this gap. Let's take a look at context here a little bit and see if we have any previous areas of structure. All right, so we took out equity here, and we have major equity down here. I think it's going to go down and get this equity down here at some point. So that's a 50% retracement further down. but it may rebound to 400 before it does that. So long-term investment, no. Short-term trade to the upside, dead cat bounce, so to speak. Good if you know what you're doing. All right, let's go to your next one, ARE. All right, again, I see why you're looking at this one too, Stuart. And I commend you for looking at trying to look at when trends are changing, because if you can get in early on a trend that has changed, then of course you have huge potential profits versus getting in late on the trend. But this is a little too early because we still have a red PTF on the weekly chart. So I would hold off on this one. Again, you may get a little bit of a bounce here, but the dominant trend is still down. All right, let's take a look, Eleanor, for you at AXON, and you are watching these as well. Yeah, it really helps me when you all tell me whether you're watching them long or short, so I really appreciate that. All right, so certainly a great one, okay, especially if you got in back in 2022, right, 23. But now it's pretty extended, and we're starting to see bearish divergence, okay, showing up. We also have 1, 2, 3, 4 pyramids in a row on the daily chart. And you know what I say, after you have 4, it's too late to get in. And you've already had many more than that, I believe, on the weekly chart. Look at them all, okay? So could it make another high? Sure. All right, but we have yellow PTFs now. All right, we have the momentum showing divergence and decreasing. So it's still pretty high. So you still may get some more highs, but it's going to have a fairly significant correction. And so that's the risk of going long here. I would wait now until after the correction and then try to go back in. So bring that back, but it won't be for quite some time. All right. So I would say no go on that one. All right. Let's take a look at this DOOG. Let me see. Whoops. Okay. DOOG. There we go. Okay. Let's load that one and see what that one looks like here. Doesn't like that one. Let's try SFM. Check the symbol on that. Either that or something's now cockeyed here. All right, SFM loaded fine. So maybe I'll try DOOG in just a minute again and see if it was just a quick issue. All right, so again, if we look at this here, bearish divergence, and this would have been better to get in down here versus here. So here's the thing, all right? There's something called discount and premium. So when a trend starts and it's way up here, are you getting in here in this early stage or way up here? And there's no way of knowing what the premium and discount line is going to be until after the fact. So when you have a move off a bottom and you have every reason to go in, green, no red, you know, pyramids, then you go in because that's going to be the discount area of a big move. So basically, you know, institutions go in as soon as they can down here. Retail usually goes in late and gets burned up here. So that, you know, by the time it gets here, all the news is coming out how great SFM is, and then everybody and their mother jumps in, okay? And then it's Russian roulette on how high it's going to go. So you got to be careful about that. So I think it's too late is basically what I'm saying with all that. All right, I'm going to go back to DOOG and see if we have any luck with that one, because I think it is a stock, but it's not loading. I don't know why. All right, I'm gonna have to nix that one. It's just not coming up unless it comes up here in the next second. So Al, I'm going to go on to you, and let's take a look at WWW. check that symbol for me, Eleanor, just to see if that happened to be something I was off on that. All right, WWG, let's see what we got here. All right, long with a question mark. All right, red PTF, so no long, okay? Quick answer. BGS. BGS. All right, red PTF on the daily, so keep watching. Not quite ready yet. AIFU. See, when you have the right tools, it becomes pretty easy when you look at these charts. All right, so all of these, you're trying to catch the next move up. I get it now, which is great. So this one has no red PTF. All right, it's still too early to go long, and I say that because one of our indicators, which looks at price action, is the pyramids. So, for example, you go short when prices breach the point of the pyramid, and your stop goes here. And then as new pyramids form, you bring your stop down. And so your stop would be brought way down here and here. But the pyramid has not been stopped out yet. So it's a wonderful trade. You could have made a fortune on this if you gotten short back in late 2023. But as long as that pyramid is technically still short on the weekly chart, you don't want to go long. And also, too, you don't have a green. This is improving. Don't get me wrong. We have bullish divergence. This will probably turn around at some point, but it could go one more dip lower. So I would put this on a watch list because I think at some point, maybe by the end of the year, maybe next year, it should be fairly good for a long trade, but not quite yet. All right. Al is back with AVD. Let's take a look at that bad boy. All right. And Gene is wishing everybody a happy Father's Day. And I will double that. Happy Father's Day. All right. That's coming up Sunday. All right, Sue, let's see what we got here. All right. So same type of thing. We still got an active pyramid here. We have bullish divergence. So we may be getting ready to change over, but it's a little early. So let's put AVD for the same reason as we did AIFO. Put that on the watch list, okay? All right. I think, is that GIII? Hopefully so. Use caps, that's what it is. Okay, good. So that came up, and again, red PTF, this time on the daily chart, so no go on that. Plus, we had an incredibly huge bearish price bar on that weekly chart. Just so you know, when you have a price bar that big and it takes out 3 price bars before that, this actually took out like 5 or 10. 1, 2, 3, 4, 5, 6, 7 price bars, then usually the trend's not over and it's going down for another what they call measured move. And how do you do that? You just take your risk to reward, set it to 1-to-1, and so probably coming down to 14.33. So I think this is a better short trade than anything else. So I'm going to put this one down as a short, not a long. Okay. And that's what you're looking at too. So I'm liking that. So this one I think is better on a short trade than AVD. Okay. So I'm liking this because I can actually measure where I think a target is. Now the fun thing is let's go over here and see if that target is in context. And lo and behold, what do we have here? We have a previous support area right in here. And this support area is also an order block because look at the move after the accumulation stage. So there you have it. So I think this target area down here is pretty accurate at 14.33. So yes, short. Now, unfortunately, the unfortunate part of this is where do you put your stop? You got to put it above here. So you got to give it the room, because a lot of times you'll get a retracement on this price bar before it sells off. So unfortunately, this is a high probability trade to the downside, but you're going to have to use measured amounts of risk to make this make sense. So lower your trade size based on your account size and everything we teach you here on calculating your trade size. Lower it so you can withstand a stop way above here. So your stop's, going to have to be above 29.29. So make it actually the high of that price bar is 29.31. So make it at least 29.32. Okay. I'd make it another 5 ticks on top of that. Okay. So that's a yes. Okay. Let's take a look at your next one for a possible short, Lulu. All right. Let's see what we got cooking on this one. All right. Again, very similar thing. You must be doing searches for long price bars on the weekly chart. I like that. If you're not, we can start adding that to your thing. Same situation here. The only thing I like about the other, of course, is we have the PTF on our side as well. On this one, we both have neutral PTFs. This is close to going red. But again, you could come up and fill that gap, which we need coming up to the middle of the price bar. All right, so you kind of have to think about that. Now, the pros, if they short this, as soon as this price bar completes, they short it. Okay, and the stop goes up here. So if you were to short here, you'd be getting in a little bit lower than they would. So, if you don't get in perfectly, all right, but you can live with the risk between here and here by lowering your trade size, okay. But another option is look at the daily chart, and we'll probably fill this gap. So you may want to put your entry to short right smack in the middle of the bar. Okay, just food for thought. All right. So because it's a late entry, I'm going to probably not recommend that one for a short trade. But that is good. That GIII is a good one. All right, let's take a look at Lulu here. All right, similar things here. I'm telling you, you're scanning for these long price bars, I think. That's a good one. 1, 2, 3, same exact thing. Notice the gap here. Looks just like the other one. I guess we looked at this one already. All right, I was going to say, boy, it looks just like the other one. Sorry, everybody. Oh, there was another one. I do want to go back and look at your AVD for a second. That's the one I thought I was typing in. All right, so let's see what we got here. All right, yeah, I don't like this one as much as I like GIII, okay? LU is not as good as GIII. All right, hopefully I didn't confuse the hell out of you. All right. Eleanor, okay, good. Yeah, I take a little time doing that, so I was hoping that was going to be okay for everybody to go over the market a little bit. All right, thank you for that. All right, Stuart, you are here with PSX. And you are thinking of a long on this bad boy. All right, so technically you still have an active short on the weekly chart, okay, but that could end. You do have bullishness on the daily chart, but I got to tell you, and you got a bullish PTF down here. All right, a couple things you can do. When you have two bullish PTFs, you can make like a checklist. If you're going to go long, you look at the PTF. Is it bullish? Check mark. Do you have bullish pyramids? Technically not, because even though these are bullish, these are MPs. And when you have an MP going against a P, then that's technically a no-go. All right. So this is one of these things that probably, it may pull back, it may not, it may keep going higher. But when I follow a rule base, I don't go into that one. Okay. It just didn't fit all the requirements. All right, let's keep going here. AMD, Advanced Micro. All right, you're in this one long, okay? And oops, let me just readjust that. Sometimes when you switch charts and the volatility changes, sometimes the chart gets a little out of whack. All right, so there we have that. All right, so we no longer have a bearish active pyramid. When prices go above that, That's a stop. So if you went short here and your stop was here, then you would trail your stop down here. So you would have made some money on that. Now, this MPs always form against the dominant Ps because they're used for either scaling out or to identify corrections in the dominant trend. That's why we label MPs, they're minors. Okay, so in a case like this, you've got a green PTF. If you're long, I would stay long because that green PTF is indicating a return back up to its highs. You've had a tremendous sell-off, so I don't know where you got in, but if you endured this sell-off, there's no reason to get out now. So hold it, okay? All right, let's take a look at your next one, CRWV. And AMD is a good stock too. I mean, that's a powerhouse in technology. All right, so this one, not much data. All right, and I guess we looked at this because I've drawn in a support area. So I think I'd wait for this to come down into this structured support area and then see how the market responds on this. And if we start getting another move up and the owl is still showing wave 3 fairly dominant, I would go in there. So don't go in yet. Let's wait for that to pull back. Okay, keep watching that, but bring it back next week. All right, the only thing on this one, we can't get much help on the weekly chart because there's just not enough data. All right, thank you. All right, let's see. Lowell, how are you? KR. Take a look at that. All right, I think we looked at this one maybe last week. Yep, I can tell because it's all marked up. All right, so here we had a situation here. Lowell, let me just get back and put you up there. Okay, so you are currently long here. All right, well, you still got a green PTF on the weekly chart. So as an investment situation, you can hold those. And we should get higher into the target zone, okay? So we broke the trend line, but we also had a bullish price bar at the break of the trend line. So you can see that here with this fairly long wick pen bar, right? So that we actually in trading look for those, okay? So the question is, did they form in an area where we would expect them to form for a reversal? And the answer is kind of yes, because look at this area here that we marked previously. So we do have another area down here below that. So if this did not hold here, then it may come down to this area. So I think there's a couple things. If you want to go long here, all right, it's not a slam dunk, but I'd probably wait for it to get above the pin bar on the weekly chart. All right, so let's see if it's done that. It hasn't done that, obviously, but the high on that pin bar is 66.23. So I'd like it to get above 66.23. And the high on this bar here is 65.23. So it needs to get up here before I would be confident that that basically this is a bull flag, okay? And we're going to get another move up. So your stop can go below the pin bar, or it can even go here, okay, below this area here. So I'm thinking it's close, but maybe let's bring that back and we'll put that on your watch list because we're in a little bit of a tricky area here, and let's see if there's follow through. That's what we got to see. Okay. All right. So if you're long there, I think you can hold it. If you're thinking about going in, we're going to have to wait, but you're already long. So I would just hold that. All right. Let's see what we got here. All right. You're watching this again, too late to go in. All right. That doesn't mean there's not going to be any highs, but again, don't forget, as a trader who uses technical analysis, when a stock moves up, I missed it. Okay. Here's a nice breakout here. We have no longer an active short. Got a nice short here, starting here, here, and here. But now it's moving up. So I kind of missed the first entry, which would have been here with a stop here. And I would have a guaranteed profit by moving my stop up here. but we're also now in an area, this looks good. Okay, this looks good, but I would wait for the correction and then get in. So I put this on a watch list and wait for the correction. Okay. I just don't like to chase markets. Some people don't mind, but I usually get burned when I do that. And usually the only time I do it is when I have a fear of missing out, right? FOMO. All right. So let's see what we got here. Same thing. All right. At this particular point, wouldn't it have been better to get in when this turned here and we had a pyramid here? Okay. So I kind of would have liked to have gotten in there. Plus, we had a very bullish breakout bar here. So this would have been a better entry here. You're in the premium area. So you should be liquidating in premium area, not buying. Okay, that's OKLO. All right, I'm going to wrap it up here pretty soon. You guys are great. Alexander is back with IBIT. And let's see what we got cooking on IBIT. You're watching this one. All right, so we got, got a leg up, right? We got bearish divergence on this leg up. Green PTF is indicating probably another high. All right, but bearish divergence. But again, you're getting in the premium area. So I would avoid that. All right, let's see what we got. Boy, we got a lot here. Okay, Eleanor's back. Okay, DDOG. We had DOOG, I think, before, right? So good, thanks. All right, so let's check out DDOG. This one comes up. Okay, so, all right. I forgot what you were doing with this one, but in any case, you got a red PTF. So I don't think I would go into this now. And since we have a red PTF on the weekly chart, then this was kind of like a dead cat bounce. And there's your target, right in your target. So I would expect some selling to return. And doing the context, we had a nice area here and here, okay, that acts as resistance. So that hits the upper side of that fib retracement. So I would expect a move down at some point. So I don't think I would go long on this. If you're in it, I think it's going below 80. All right. It may go up a little higher, but not much. Especially if that holds there. It could go up to this resistance level too, up in here, right near where the order block was, right? Could go up there. And you have a fair value gap, bearish fair value gap there too. So any one of those gray areas should halt this move up. Okay. So that's DDOG. All right, constants. Let's see what we got here. Adobe, ADBE. Let's take a look at Adobe Systems. Obvious downtrend and have a long-term loss. Well, long-term losses happen. The good thing about long-term losses is if you need a tax write-off, you got one, right? So you got to look at the positive on that. So in a case like this with Adobe here, we got a situation where if you suffered through the downtrend so long here, okay, we do have a green PTF on the daily chart for more highs here. But let me see, doesn't necessarily mean that's going to be the beginning of a new trend. So here's what I would do. Since you've been in it, let's find the structure. Okay. Lo and behold, look where we got the bounce. Right on the order block. Okay. So let's see if we have some more follow through the upside. I would hold it. Okay. Because we hit that order block and maybe that's all it's going to do. Could be a double bottom here and go on up. Or we may come back down one more time. But green PTF, I would hold it for right now. Okay. All right. Let's take a look at gold. Ooh, that's a good one. Gold. All right. And you have a long-term gain in gold. Well, if you sold gold and sold Adobe, you probably have very small capital gains, right? So look at it that way. All right, so gold, powerhouse, okay. Micro channels, you can see one here. But like everything else in the market, There comes a day when the party ends, right? Is gold at that time? Well, we still have green PTFs. Okay, we do have a little bit of a bearish divergence here. We're due for a fairly decent correction. And if we get it, then we're looking at an area on this far right-hand chart of between 254 and 214. And then, believe it or not, after that, we should have even more highs on gold, which is kind of interesting. All right, so we'll see what happens with that. You know, maybe the market makes another high and gold pulls back because everybody gets bullish on stocks and, you know, comes out of gold, and then we reach a new high and then it sells off. Don't know what the outcome of that is, but everything basically is still green here, but the party will end. All right, and we will get a correction. We had this area here on the daily chart as a possible short-term corrective area between 288 and 269. And that would be a minor pullback on the weekly chart before we, you know, go back up. So I think probably I would hold it, but have maybe if you've got a long-term gain, you don't want to give it all back, right? So I would have a spot in your mind where you want to get out. And maybe that spot is below this pullback area or even below this low here. Okay. I think that low there might be fairly representative of the low here. Okay. So you can do it that way if you want. All right. Or endure the big pullback and put it under your pillow, so to speak, and don't think about it for another couple years. Okay. All right. Or at least another year. All right. So kind of interesting one. All right. Let's see. I'm only going to do a few more. So I'm going to end here. I'll do AL CTM. And then I'm going to start doing my trading today on the NASDAQ. I'm working on a bot for trading, and it's been a lot of fun analyzing it and testing it and tweaking it and so forth. So I want to get back to that before the day ends. So on this one here, we got, where are you? CTM, there you are. Okay. So long, question mark. Okay. You're not chasing the market because we got the pullback. All right. If we had been here and you said, should I go long? I'd say no. All right. But now we've got the pullback. Appears we may have a breakout of this channel. That's a good sign. We still got this here. We filled the fair value gap. One thing I've noticed on fair value gaps in the markets these days, when you have a fair value gap, it's basically 3 price bars. Like that's the fair value gap over here, this little area here. Terrible drawing, but you get the idea. All right, so you got a fair value gap. It's actually here to here. Okay, so that's the fair value gap, and you never know how deep into the fair value gap prices are going to go. So that's the tricky part. So if you're going to go long on a fair value gap before waiting for a bottom, you got to put that stop below the price bar, way down, even lower than the fair value gap, because it can go pretty low and sometimes exceed it a little bit. Okay, so this is looking to me not bad. All right, let's see. We're starting to see a breakout here. So I'm going to say possible. The only thing I don't like here on this is this bearish bar here. Okay, it came basically right in the area here. So that one did not get exceeded. And even that's a bearish bar. So that concerns me. I think what I would recommend on this is wait and let's see if that bar gets taken out. Okay, because I think we're going to get a pullback. Pyramid weight hold. If we get a pullback and we have a turnaround here like that, and this bottom holds here, then I'd say yes. I'm going to put CTM with a star on it on my list and put that on the watch list, high probability. So keep an eye on that. But this is the only thing I would say go long now if this wasn't such a bearish pin bar on the weekly chart. That concerns me a little bit. All right. Okay. So that's my assessment on that one. All right. Constant, MET. All right. So you got a long-term gain. Already sold 2/3 of the position. Okay. Let's see what we got cooking here. All right. So we're coming up and we're kind of rolling back over. Trying to see, I guess you got bearish divergence here. Well, the fact that, we came down to this support here, got support here, got a whole bunch of equity down there. There's no more red PTF. So we may now go sideways for a little bit. So you took out the equity here. Okay, so that's a good sign. There's some more equity down there. I think it's probably going to go sideways at this position, at this point. We may get a pullback down in here a little bit. Trying to see, we have one active bearish pyramid here still. So I guess I would hold it in hopes that this was the goal of the pullback, to get the equity out. But it may dip back down or up. So since you sold most of it already, I don't know how much profit you're sitting on, but if I was trading this, I'd probably just get out. Okay, it's not one I really like, but since you've already sold 2/3, you also have a chance of this now breaking back up. So I'll leave that up to you. Not much help, I know, but. All right. Stuart, this is the last one we're going to do because I think this is it. QXO. All right. So you're long. The stock started trading on 7/31/24. Ninja Trader needs to be adjusted to start date 7/30 to show correct chart. All right. Let's see what we got. This is, I don't know if my chart needs adjusting, but this is what I got. All right, so let's see. Yeah, it looks like something's wacky down here. Well, we got green PTFs on the long-term chart, and we've got to move off the bottom, and we got a pyramid here. It's funny. It looks here like it barely moved, and then when you magnify the chart, you're like, whoa. Okay, so yellow PTF. Let's see. 7/30/24. Let me just see. Yeah, okay. Well, interesting. I think the chart might be out of whack. That's the only problem with it. Boy, look at that price bar. It's pretty bearish. I'm not sure I got the chart set up correctly, so I'm not sure what to tell you in this one. Okay. It's in an uptrend. I mean, how do I know that? Well, just draw a trend line. But it's also had its second high. All right. So that's kind of in the premium area, right? So I'm going to stand aside on this one and basically no evaluation. All right. I think we went through everything. Boy, you guys are great. All right. And as Gene says, yeah, we appreciate the likes. And let's see what else. Lowell, happy Father's Day. Same to everybody else out there. All right. And that is it for today. All right. So listen, oh, no, it's not. You know what I want to look at? Tesla, real quick. Let's take a look at Tesla and NVIDIA. All right. So Tesla moving off its bottom here. All right. So Tesla and NVIDIA are two stocks that I think pretty much long-term, you can buy them and put them under your pillow. Okay. Because these are Tesla and NVIDIA are leaders in AI. Okay. And AI is going to be used in robotics and things like that, which is another. I think robotics is going to be as big as the iPhone at some point. Okay. So this is an industry I think you want to get into. And these are the two biggest players, to my knowledge, right now in that field. There's probably more, but NVIDIA and Tesla. So Tesla came down, you know, for reasons we all know and all that kind of stuff. But it reached structure, okay, here, all right, and bounced off it. And now I think we had another touch on that structure. So when you get above structure, then it acts as support. When you're below it, it acts as resistance. So now notice how prices came down and went off. I think this is going to make eventually new highs, and the PTF agrees with me. So the target is 454 to 598. We're at 320. And that is, the PTF's even higher than that. It's here. Okay. So again, I don't think it's too late to get into this one, especially since it had a recent pullback. So let's put Tesla once again on the buy list, and NVIDIA. There's another one that came down, and we recommended it when it got to that buy zone here. So basically, just to simplify, buy zone, sell zone. Okay. So I think it's moving up to its sell zone. We make, you know, it's not going to go straight up. It'll pull back. I think at this time here on this leg, we are a little overextended, so I could see a pullback. So you might want to wait for the pullback. And we're getting awful close to the target too. So if you didn't get in earlier when we recommended, I think you missed it a little bit. And I wait for a pullback, okay? But I think it's getting up to 164 and 170 to about 225, okay? Right in that target there. All right, so that is it. Okay. Jean is keeping track of those likes. Okay. Only 6, she says. Well, we only got 14 people here, so that's 50%. That ain't bad. All right. And we've got yep, that's one winner from Al. That is it. And Tesla's a buy. Yes. All right, guys, that's it. All right, have a great Father's Day weekend for those. And we'll see you back here next Friday, okay? So have a good one, and we'll keep an eye on the markets and all these stocks. So we've got just a quick recap here. On the good side, ones you can take immediately or should be in, we got Etsy for a long. We got GIII for a short. All right, and we got Tesla for a long. And then we've got NVIDIA on the watch list for a pullback. We got IFF, I think it's O for that, ABD, KR, CJJ, and CTM on the watch list. CTM is one we want to keep a close eye because I've got a star by that. All right, so you have a good one. All right, and we will see you back here next week. Thanks so much, everybody. Have a great week.